As you're growing, you feel like it is that your hands are in everything. You feel like you have to touch everything. You feel like it is that I want to make sure that I do that, I touch that, I whatever it is, because my standards are at a certain level. You have to bring people around you, even if their product is 85% of your product. It's better to be able to do that than figure out it is that you have to do 100% of it and touch everything, because honestly, that's just a losing battle, regardless of your business. Realize you're not good at everything. Yeah. There's parts of your business that you can do, but it's going to take you 4 hours to do something that somebody else could do in 20 minutes because that's what they do. And allowing yourself to do that allows your business to grow and have that kind of critical impact it is that you can have without having to touch all the crap that you're not good at that's bogging you down and preventing you from doing the stuff that you're good at, which is probably why you got the business to start out with.
Welcome back to Mic'd Up. I'm your host, Mike DiCioccio, and today we're diving into the inspiring world of a true visionary who's hailing from the heart of Texas. Today he's actually just outside of Scottsdale in Arizona, but he hails from the heart of Texas. And this entrepreneur took a leap of faith back in 1995, leaving college to build a life with his wife. 29 years and 3 amazing kids later, he's still going strong. As the mastermind behind JB Capital, he's not only raising funds, over $1.5 billion worth, but also shaping the future through mentorship. Let's explore his story of resilience, faith, and the impact that he's making on the next generation. Welcome to the show, the founder of JB Capital, Jeremy Hill.
My man, how are you? Thank you. What a great intro.
Thank you, sir. Thanks for coming and hanging out. I know you had a great day so far. Off camera, we talked about the high expectations you have for today, so I'm not going to drop the ball. The bar is high. I want everybody to know, if they're tuning into you for the first time, your website, your social media, everything is in the show notes, so they can just dive right in there and get more Jeremy Hill. And you know what? Before doing an interview, I always like to poke around a little bit, do a little research, see who I'm going to be talking to. And I learned that your nickname is JB. I was wondering where the JB came from and not JH Capital. So JB is your nickname. When you started, JB Capital, I was putting it all together. It kind of felt like an old episode of Columbo. You know what I mean? Nice. But I want, and half of my audience or more doesn't even know who Columbo is, but that's fine. Tell the genesis story about the day that JB Capital, the inception story, and just how it became what it is today.
I would love to say it is that, JB is, James Bond, right? That's my alter ego. I wish I was that cool and good looking. It's not.
I thought it was JB Smoove. I don't know if you watched.
Smooth. That's right. No, my nickname had been JB growing up. It's what my grandfather kind of affectionately referred to me at, and kind of close family and friends. And so middle initial is B, Brandon. So Jeremy Brandon, GBH. And so that just kind of, stuck. And a few people over the years it is that I've been really close with, that's just kind of the default of JB. And so when, I started JB Capital, it is where we started actually at the end of 2002, end of 2002, beginning of 2003. So we're about 23 and a half, almost 24 years now in business. Kind of started by accident. I think a lot of people have this 1, 2, 3 paint by numbers approach it is to what life is going to be. And it's going to be great. And I'm going to be a Norman Rockwell painting and have a Jeep Cherokee and a golden retriever and shit like that. And mine wasn't like that. I had been in and out of a number of businesses, and I'm trying to find my feet. I think like a lot of people, right? You're kind of taste testing life and trying to see what's going to work or not work, or where you find home or where it feels comfortable. And
you have to do that. Otherwise you get stuck in something you don't belong in.
Yeah, too, which is, that's a whole nother discussion about, college, getting a degree that you don't know anything about, going to work, shit, I'm here, right? 20 years later, I've been doing the same shit for 20 years, and I forgot to see whether I actually liked it or I'm happy, right? And so I think fortunate it is for myself and my wife and I early on as we taste tested a lot of things. I think for us, that is a polite way of saying it is that I got fired from a lot of jobs, right? I taste tested a lot, and it was either I quit because I didn't like that, or I was shown the door because of one thing or another.
And hey, let's remember Steve Jobs was fired from Apple at one point. So
hey, there you go. And that's true. That's true. I got to get my turtleneck. So maybe a little hot in Arizona for a turtleneck, but I ended up toying with the real estate business. This is early on in 2000. Ended up toying with the real estate business at that time. In the early 2000s, the market was going crazy, and you didn't have to be that smart or good looking to make money in real estate. My two qualifications: not that smart, not that good looking. Right? I'm in. And started doing pretty well in the real estate business, but I got bored with it from kind of a traditional broker sales model. At the time in Washington, there was like 30,000 real estate agents, and now there's 30,001, and everybody's smarter than everybody else. And that didn't sit well with me because I didn't want to be one of many. I either wanted to be one of one or one of a few, right? That's always wanted something different. And I
didn't feel like always fitting in with the crowd just to fit in the crowd was not your MO. That wasn't
not at all. And still not, right? Like it still don't fit.
And it wasn't different just to be different, because I could do something real wild on the show right now and to be different, but it doesn't mean it's going to be good or entertaining.
Yeah.
So you just felt you were beating your own drum and you had the story you wanted to build for yourself.
Yeah, it did. And so it happened kind of by happenstance. I got introduced to a builder developer that was, building a series of townhomes up in Washington where we were at the time. Got introduced to him, connected, went to his office, met him, sat down, had a cup of coffee, started asking a bunch of questions and just getting acquainted. And he ultimately came back. His name was Jeff. And he said, it's nice, great, nice to meet you, so on and so forth. But I think I'm actually going to give the project to, John, Jill, whoever it was at the time, which was like, who cares, right? Like, I said, well, that's great. I think they'll do a great job for you. That's not why I came. And he's like, well, I guess he assumed that I was there for the hustle, right? To try to get the deal done. No, I'm not. I know good people who said you're good people. We got connected. I've seen you around, heard about your business. I just wanted to meet you, shake your hand, get tonight. And so now we go from, I've got an agenda, it is that I'm trying to get in this guy's pocket, it is to, shit, now we're just friends. And so he starts telling me about how he started his business and what his wife does, and his kids are involved in the business, and here's how they're building, and here's how they got started, and all that. Great, awesome. I love that. He starts telling me about this next project. He says, well, we're building these dozen townhomes, and here's how it works, and so on and so forth. And just ignorantly, stupidly on my part, I said, well, how do you, where's the money come from? How do you finance this stuff? And just dumb. I didn't know.
You don't know. It's a true thing. But yeah, I mean, I appreciate you literally saying that, because there's a lot of people tuning in thinking about how they're going to get capital for their next project. So
totally.
How did he respond to that?
Yeah. And no airs at all on his part. He was, well, we're going to spend, $4.5 million at the time. Now remember, this is 25 years ago. And he said, we've got about like $1.5 million of our own. The bank's given us some, another $1.5 million or $2 million. But he had a hole of like $500,000 or $700,000. And I said, well, you're still short there. Like, where does that money come from? And he goes, oh, well, we have, people in the community and, small investors and friends and doctors and, pass the cup, kind of thing, shake the cup it is and fill that up. And I said, okay, well, I guess that makes sense. And I said, well, do you want help with that? And he goes, well, maybe. Do you think you can help? And I said, I don't know. I know a lot of people. Tell me about the project. Give me some stuff. Let me see what I can do. Let me make some calls for you. And so ended up raising the guy like $500,000 or $600,000 in about 45 days. And I was like, great. Didn't charge him anything. Didn't even know you were supposed to. Didn't even know that was a business. I'm helping out my buddy. I got a new friend. See what we can do to put him on.
And honestly, your first time doing something, that's not a bad strategy to have to prove your worth in the long game too. But not telling everybody tuning in to work for free, but hey, if that's a way you want to get your foot in the door, it's not a bad idea.
It is. I mean, sometimes being ignorant is okay, because then you don't have any, preconceived notions of what it is that it's supposed to look like. I didn't know what it was supposed to look like. Didn't even know it was a business. Didn't know I should have charged. Didn't know anything. Provided an obscene amount of value to this guy, unconsciously on my part, purely because I got a new buddy. Let me see what I can do to help him.
Yeah.
And so what ended up happening from that was about 3 weeks or so later, I get a phone call. It is from another developer named Dan. Dan said, hey, I was talking to Jeff a couple of weeks ago. I got this project out here. He told me what it is that you did to help him. Got this deal over here it is that we're looking at. Do you want to sit down and talk about it? I was like, yeah, sure, I guess. Sit down with him, walk through the thing, kind of a similar scenario. He had about a $600,000 or $700,000 hole. And he goes, do you think you can help me with this? And I was like, well, I don't know, maybe. Give me a couple, tell me what it is that you're looking at and like, time frames and all the questions it is that you ask. And I said, I'll see what I can do. And he goes, well, what do you think it should look like? And I'm like, should look like. Like I've got like 2 weeks experience. Like, fuck, I don't know. Like, well, here's what we did for Jeff and here's kind of how his shaped up. And so my guess is probably something like that. And he goes, okay, great. And so we're sitting down talking and he goes, so what do you charge? Charge? I was like, nothing. I'm thinking to myself, I'm like, wait a minute. Huh. And I was like, well, real estate guys are charging like 3%. And so I'm like, okay, well, it's 3%. And he goes, on the capital that you raised? And I said, yeah. And he goes, no problem. Happy to do that. Great. Do you have a contract or something you can send over? Sure. Of course I did. Piece of cake. No problem, right? And so
ran home and opened the word processor on your computer.
Seriously. Commodore 64, that bitch, right? And I was like, okay, great. So we kind of shake hands and I'm going to the car and he said, hey, Jeremy, he goes, what's the name of the business, by the way? Shit. The first thing that came to my mind was JB. I said, it's called JB Capital. And he goes, I think I've heard of you guys. I was like, yeah, of course you have, And I get in the car and kind of drive off and I'm like, okay, what's happening here? And so I jumped on the phone with my attorney while I'm in the car and I said, hey, John,
that's awesome.
I think I just started a business. And he goes, okay, well, tell me about that. And I said, well, here's kind of what's happened over the last month or so. And here's what we did and so on and so forth. And he goes, dude, do you have any idea what you're doing? I'm like, kind of. And so, but I need you to put together an agreement for this guy because I told him I'd send him one today. And oh, by the way, can you start a company for me called JB Capital, however you go do that? And that's how that happened, right? And so that's where
so cool.
The JB and JB Capital came from. Now that was 24 years ago and almost $1.8 billion in transactions and advisory work ago. And so when I look at this now, like one of my favorite books over the last couple of years is Green Lights by Matthew McConaughey. And he just talks about like, you have opportunities in your life. It is to show up. And sometimes it's easier to just kind of follow these paths that you're presented these green lights and kind of see where it goes. And looking back on this now, that's kind of what it is unconsciously. It is that I was doing. And it worked.
You're following the green lights, the thing that I want people that are tuning in right now, I don't know where you're at in your business or idea of creating a business, but the thing that Jeremy did that's just unique, not really unique in a lot of entrepreneurial stories, because you have to get out there and do the work. But what's unique is that you created it kind of on the fly. The business kind of found you, the opportunity kind of found you, but it wasn't by accident because you went to at that time, you were trying to create a relationship and create a friend. He didn't know why you were there. He thought you were just trying to sell him something, but you were doing the right thing. And like, I just want to network and connect and get involved. And then once you had the opportunity, the light bulb went off and then you started to roll with it. And so anyone who's tuning in now, get around great people, have an idea of what you want to do, maybe do it for free the first time, get the experience, and then figure out how you're going to turn that into a business and do it legally, like you talked about, reaching out to your lawyer. And it doesn't cost that much to get an LLC or an S Corp or whatever. It's usually a few $100.
Sure.
And maybe an hour of your attorney's time. At least in my experience, hasn't been super expensive to get started. And anybody with a website, a computer, a tablet, and a coffee at Starbucks can start a business today.
Yeah, without a doubt. And the world is infinitely easier today with the advancements in technology and AI and where things are going and marketing and telling your story and putting together websites and communicating with your audience, leveraging HubSpot and on and on and on. There are so many tools. There are really no excuses to not at least try.
Yeah.
Like try.
We live in an age where there's no excuse. I mean, 100 years ago, you had to be privileged to have a good library and you'd have to seek out business books. Yeah. And then from there, you might need a great mentor that would even be willing to give you time. Now, what would have taken you months of research, you can get done in 5 minutes.
Agreed.
It's insane. If someone 100 years ago knows what we all have at our fingertips and how very little people are taking advantage of it in a good way, I think they'd be throwing up. They'd be sick to their stomachs.
Right there with you, man.
Here's the thing. I believe in fate. And I think it's fate that you're on the show today and that you're connected with me. And in a little bit of a selfish way, I'm really glad that you're here because I'm in a position with my company. I can tell you everything you want to know about it and we can talk off camera. But, I started in 2017 and for the first 2 years as a media and marketing company, helping small businesses in Buffalo at the time, really with like their Facebook page, their video, their website, stuff like that. I thought that's what I wanted to do. A couple years in, I was like, man, I left corporate America to start my own company. And now I'm not even, I left there because I wasn't fulfilled. And now I have my own thing going and I kind of wasn't fulfilled. I started the podcast as a passion project, interviewing people like yourself. And then a lot of people on the show were like, hey, I want to start my own show. Can you help me do it? You do a nice job. And that was the same thing. I was at that table and they say, how much do you charge? And I'm like, I was doing it for a buddy for basically lunch money at my first client for podcasting. And so I was like, I'll get back to you. And I did the same thing, wrote an agreement. And it started off for a few $100 and it went from there. And now a handful of years later, it's really turned into something that I'm very proud of. But still, every dollar that this company has earned, none of it's come from capital. None of it's come from a private investment. I don't have any VCs involved. It's all literally been, I started with nothing, helped a few clients, made money, profit. The greater the profit grows over time. I've been able to build a team of 5 people. And so we're still very small. We're like that little speedboat that can turn and adapt and grow. Right. We're not the big, tanker that takes 6 years to make a U-turn. But the reason I brought all this up to you is to give you the world a scene. I'm in a position I feel like where we want to scale. And so I may be looking at like a private investment. So what can you tell me, or what questions do you need to ask me first to be able to evaluate how you can possibly help me?
Well, so whether it's you or anybody else, so first I congratulate and applaud you for what it is that you've created, right? And the fact it is that you're becoming more learned and aware of who it is that you are, what it is that you want to do, and stuff it is that kind of drives you and passions you and moves you forward. Very few people find that. And so I think that's fantastic that you found something, you found a lane it is that you want to swim in. Dude, it's awesome.
It kind of found me just like JB found you. Like
totally.
I was doing it as a passion just to interview people and learn from them. Mm-hmm. And then eventually I realized, hey, people are willing to pay me. Actually, it started off, they wanted me to teach them how to do it. Right. And then right away I realized people don't want to learn how to do it. They want it done for them. And I'm like, it's done for you podcasting. Totally. Boom. And I just stopped doing all the other stuff I wasn't happy doing. And I just ran in the lane of podcasting. And that's what's really been able to,
I think the first thing it is for you specifically, and then your broader audience, for you specifically, it is, not everything needs to raise capital and not everything should, right? Like we see all these headlines about ABC company and what it is that they're doing. And they raised $1 million or 10 or 100 or $1 billion or whatever, and it looks cool in headlines, but you don't understand people don't understand the underneath of things of what actually it took or went into that to raise capital. They don't understand it is that person it is that did just raise $10 million at XYZ valuation. You're like, that doesn't even make sense. Oftentimes you'll find it is that founder was maybe an entrepreneur in residence at the private equity company. They spun them out, funded the deal, and put them as CEO as a place. Like there's so many things it is that happen underneath the surface that it's hard to read the headlines and take it as truth. And so when you think about your business, whether it's your podcast business or somebody that's trying to grow a construction company or a real estate business or a software business or whatever it is that what's the point of raising capital? Like I love how it is that you've done it kind of organically growing and figuring out a way to not go out and raise money, because whether raising money is raising money from a bank or a lender, or raising money is from an investor of sorts, you're now adding a complication into your life, good or bad. It could be, you have a variable, right? So you and I go from a 2-person relationship to now a 3rd-person relationship, right? And so there's something it is that we're giving up for that. We're either paying interest on the loan, which, takes away from my profitability, or we're bringing somebody in and we're giving up a % of equity in the business it is that now I've got a 3rd person in my marriage.
You almost have new problems now. It's like, okay, well, you got some money, but now you have interest and you have other, you may have lost a percentage of your business because you're giving it up for equity.
You couldn't.
Right. Yeah.
And so there's a number of things to consider when you're going through that. Number one, whether you actually need outside money or not, right? Because it's going to be a trade-off. Good or bad, it could be an extraordinary thing. And so once you make the decision, whether it is that you do want to go raise outside money or you do need $100,000, $1 million, 5, 10, whatever the number is, it doesn't matter. Once it is that you made that decision, then ultimately it's, what is that money going to do for you? Like, what do you want that money to accomplish?
So what does the blueprint look like if you're going to go to somebody and so you're going to a company that can provide capital. Private sector is kind of what I'm talking about here.
Sure.
And they say, okay, well, show me what you're going to do with the money. What does a blueprint typically look like in that situation?
So the first thing people need to understand is that there's different kind of pockets of money out there, and each of those pockets of money has a different operating thesis. Like somebody it is that's investing in early stage startup type businesses, guys that are just getting off the ground. They're moving from, idea on a cocktail napkin to proof of concept to finally starting to get some revenue. That's one kind of investor. There's investors it is that are a little bit further along the line. It is that you've gotten past the mom and dad, friends and family around to raising dough, and now you're looking for a little bit more mature capital. There's traditional private equity. There's varying different parts of lending and alternative kind of private capital that provides private loans, which is what JB's done for 20 whatever years. Mm-hmm. And so I think the first is understanding kind of where your stage of business is, right? Like, and that's going to determine a lot of who your actual audience for capital is. And once it is that you understand that audience, that will kind of reverse engineer how you need to communicate to that audience based upon how they like to invest capital, right? Does that make sense?
Makes a ton of sense. So it's unique to the situation you're in at that time for obviously how much you need, but who's the right partner for you to get help. So here's my situation. I'm the bottleneck right now of the business because I'm still doing too many production tasks. Everything goes through me. Anything that's produced, we have dozens of shows. I'm the executive producer on. Everything's still going through my desk. And some of the production I'm still doing myself. The reason is I have a great team, but to literally push everything off to them, the expenses get to a point now where you factor in your OpEx, your team expenses, taxes, and I get a little bit of the cake at the end. To I have a beautiful daughter and got to do the right things for be able to raise a family. At the end of it, it's very much like all of that covers it, right? So you're basically above water at that point. So anyone who's listening right now who knows that feeling of, hey, everything's cool, it covers it, but we want to get into a position where we can really grow. And so for me, I need to get into the sales role. And eventually, first it's going to be me just doing sales outreach to then get a sales team underneath me that's trained. And I feel like because we have a good profit margin and a good profit story with the company, we need more clients. Sure. And for me to get more clients, I need to stop doing production tasks and focus on that. So that would be my reason for raising some capital, would be to bring on the team members that we would need or extend the current team from part-time to full-time. And now I'm really just CEO of the company, as I should be.
Yeah. I mean, this is the organic growth story of every business out there, regardless of what it is that you do, right? Early on, when it's, you working 24 hours a day, and then it's, you and your brother-in-law and your dog and, whatever else it is, right? And then the story kind of, manifests and grows over time. Or kind of,
Did you read my bio? How'd you know all this?
Right, exactly, right? You look at that stuff, the thing for every entrepreneur, and I've been guilty of this myself in my own business, is that as you're growing, you feel like it is that your hands are in everything. You feel like you have to touch everything. You feel like it is that, I want to make sure that I do that, I touch that, I whatever it is, because my standards are at a certain level that I know that the production quality, the quality of product, the agreement, the contract, the structure, the whatever it is, the end product for whatever it is that you do is something that I can get behind because I did. And that's great. The challenge with that is that no matter how much you pray, God only gives you 24 hours a day, right? I've been praying for 25 hours a day for 50 years, right? And still hasn't given it to me. So there's limitations there on what it is that I can do. And so I think the first thing is understanding that, if you want to go fast, go alone. If you want to go far, you go with a team, right? And so you have to bring people around you. It is, even if their product is 85% of your product, it's better to be able to do that than figure out it is that you have to do 100% of it and touch everything. Because honestly, that's just a losing battle, regardless of your business. And so I think that was one thing that I learned that I think was a critical lesson. The other thing too is realize you're not good at everything, right? Like there are things in your business.
Well, I've realized that.
Yeah, right. Exactly. And if anybody listening, if you don't know that, just ask your wife. She'll tell you the shit that you're not good at, right?
It is why I finally hired a bookkeeper after a few years. Like,
right.
This is shit.
But there's things like that. Like There's parts of your business that you can do, but it's going to take you 4 hours to do something that somebody else could do in 20 minutes because that's what they do. You need to realize it's okay to kind of release some of that stuff to allow you to do the 2 or 3 things it is that you're exceptional at. When I hired my EA and kind of ops manager gal, was a rock star. And her sole purpose was, here are the 2 or 3 things in my business it is that there's nobody in the world better than. Anything that is not those 3 things, don't even tell me about it. We'll meet once a week and go over it, but I don't even want to know what's going on. Like, just don't tell me about that because I need to focus on these parts it is that nobody can do better than me. And allowing yourself to do that allows your business to grow and have that kind of critical impact it is that you can have without having to touch all the crap that you're not good at that's bogging you down and preventing you from doing the stuff that you're good at, which is probably why you got the business to start out with, right?
1,000%. Yeah, that's so good. Yeah, I just had a great conversation, gentleman out in Australia, Lloyd Ross. Be a great connection for you. If you want to get to know him, let me know. And his whole thing is he has a book coming out in May that's all about being time rich, right? Stop being busy and start getting wealthy, because being busy feels good, but who cares how you feel? Is your business driving forward? Are you doing income producing activities? Or are you feeling good because you were busy today and you got a lot done?
Totally.
Yeah. So great conversation, very similar to what you just outlined. But I kind of wanted to, I'm just wrapping my mind around, I want this blueprint. So if I do need money or want to go that route, and that makes the most sense, what would that look like? We could talk off camera to kind of outline it. Big thing that's going on in the world right now is we kind of had, you had Wall Street, Main Street, and then now you got these more private companies like yourself. And there's this big transition from traditional bank financing to private credit. Yeah. So how is the trend reshaping the whole investment landscape?
Dude, dramatically. I mean, so from an investment standpoint, private markets are the future. And so when we look at public markets, public equities, stock markets, there are, I'm going to get the number wrong, but it is something like there are 50% fewer publicly traded companies than there were 25 years ago. Like, the world is moving towards private markets.
Yeah.
And so when you see what has happened over the last probably 30 years or so, 35 years in private equity, is that private equity has become kind of the new public markets. Private equity has become the new banks, right? We have about 60% fewer banks than we had a dozen years ago, 15 years ago, coming out of GFC, right? We went from 11,500 thrifts in 2008 to post-GFC in 2010. We went from 11,500 to 6,500, 2010 to 15. We went from 65 to 5,500, 15 to 20. We're now at they went to 4,500, and now we're settling at about 3,800 to 3,900 banks. So in this,
it's like the equivalent to they were on horse and buggy, and now you're in a Ferrari.
A little bit. Well, from the banking standpoint, kind of traditional lending, what it
just
means
for
is
how fast it's moving, I feel like.
Yeah. What that means for the audience is that from a traditional lending, banking, and kind of conventional way of thinking about finance, there are fewer options. So whether you are a borrower or a consumer, there's fewer girls at the dance. There's fewer options. There's fewer choices. At the same time, to where you've seen that massive decline in banks, what you've seen is the actual inverse of that in private capital markets. To whereas 15 years ago, kind of 2010, we were looking at there was maybe 1,500 to 1,800, companies in the private market, private equity, venture capital, private capital, direct lending, alternative lending, this kind of thing. There's about 1,800. Now there's about 18,000. So everybody it is that previously was a shitty banker has now moved into the private markets and is offering alternative capital. So private finance, whether it's private equity or private lending, is going to dominate the capital markets for the next 25 or 30 years. It's going to be exceptional.
Is that because it's more advantageous for the borrower, the consumer? And it's just the market talks, that kind of thing? Like, it's better for the smaller businesses to go that route. So I don't know. There's more opportunities for them to go that route.
I think it's a couple of ways. It is better for the borrower, but better for the borrower in certain instances. Private capital markets are certainly not as inexpensive as traditional capital. So, I can borrow money from bank of whoever at, sometimes half or a third of the cost that I can borrow from private markets. The challenge is that banks have been overregulated to a certain degree. It is that, you've all but eliminated the totality of risk that your local bank is going to take to loan Mike and I money to do whatever we want to do for our small business, right? So they will try to foster that stuff through the SBA because the SBA gives them insurance and guarantees and higher fees and all this other kind of shit. So they'll often drive you that way. But the challenge is that, banks kind of can't get out of their own way. Like we've heard that whole famous Twain, saying it is that, a banker is somebody that gives you an umbrella when it's sunny and takes it back when it's raining, right? And so because of so many people having that experience time after time after time after time after time, they just finally go, I'm not even going to talk to my banker. I would rather borrow money from the rich guys at the golf club. I'd rather borrow money from my uncle. I'd rather take it out of my 401k. I'd rather go to, the private markets as large as those are and figure out a way it is to gain capital it is so I can do this, because even though I'm paying more, I almost have a certainty of execution. Like I know I'm going to get a deal done, even if I'm going to pay 12% for the money rather than 7% for the money, because my banker's been looking at this damn thing for 3 or 4 or however many months and just, we're almost there. We need some more information. I need a blood type. I need a picture of your dog. I need, whatever it is. And these guys are like, we're going to look at it for fucking 3 weeks. I'm going to go to docs in 2 weeks and we're going to close 2 weeks later. And so I can go start to finish in 5 or 6 weeks. And 6 months later, my banker's still trying to figure out what the hell he's doing. Like, that's why people are going to private market.
Speed. Yeah. Speed. Dude, oh, that's incredible insight that I did not know. And so talk a little, here's what I want to hear. I'm thinking about your story. I'm still imagining you sitting at the table and the guy goes, how much is this going to cost? You're like, I think real estate's 3%, so it's 3%. Like
I know I should have charged you more.
You're thinking that, right? But I'd love to hear how you actually got those deals done, because there's almost could be like a movie. Like, okay, like the founder of the McDonald's story. Like we got to see behind the scenes of how he really built that whole thing, Ray Kroc. But like, what were you doing? Yeah, the guy said you did great for this dude, and 3% on the. What was it, 600,000? We could do that. Then what? Like, what did you actually go and do?
No, because all of these people had a reputation, right? Like every business, right? Like if I'm raising money, it is for Joe's Crab Shack, whatever it is here in Scottsdale, Paradise Valley, a builder, a developer, a software company, whatever it is, right? Ultimately the job as a investment banker, as an advisor there, is to be able to take and craft their story, their background, their bio, their experience, their successes, their failures, their tenure, their all of this kind of thing. I want to take that, I want to put that in such a fashion that I can articulate the value of what it is that they're doing in such a compelling fashion it is that Joe or Mary or the local bank or whoever it is willing to take a bet based upon the combination of those things it is to give them 50 grand, 100 grand, $1 million, $10 million, whatever that is, right? And so it's your job to package that, market that, communicate that, and then leverage Joe, right? Because I'm just Chuck Woolery, right? Like I'm just playing the dating game, right? Like I'm like, I got a really hot friend.
Matchmaker, yeah.
I got a really hot friend. He's got a good job. He's got a nice car, right? He's never, right? Like all of these kinds of things, right? And I'm marketing that to set him up on a date it is that I'm going to chaperone.
That's pretty cool.
That's how that started. Now, we've gotten a little bit smarter now over 25 years, thank God. But to start out with, it was pretty simple, dude, because I didn't know anything else. Mm-hmm. Right? So.
What's the math on that? You made like 20 grand on that deal, right?
Yeah. I
not bad for you.
I wouldn't do that deal today.
No, but I'm just saying, at the time, that was pretty sweet to get started.
At the time, that was pretty sweet. I remember when I was onto something and I was like, this is a real business. Is that at that time, kind of during, later period of time, we ended up getting brought in because there were some banks that were getting, this was just before GFC, there were some banks that were getting kind of twisted up and they needed to sell assets. And an attorney brought us into a deal to where we started advising this family, and we ended up, it was, I don't know, $3.5 or $4 million that they needed at the time to kind of plug a hole so they could buy themselves another year or two to figure this out. And we had put the agreement together, and my wife and I'd closed the deal before. And this was, I can't remember, 2004, 2005. It was the first time I did my family, and I had gone to Hawaii. And we were in Hawaii, and our family's having a holiday, and we're having a good time. And I get a ding on my phone, like not a text ding, but like a ding on my phone. And I was like, what is that? And so I grab my phone and I look at it, and it was an acknowledgement of a wire transfer. And I was like, what is this? And I'd gotten a ding on my phone that while I was in Hawaii, I got a check for $75,000. And I was like, what is this? I'm like, maybe I got to go to the room. I'll be back. And so I go up to the room, and the deal that I had put together, 3 months before, that I had been working on, that we were going back and forth on, closed, transacted. And I got a wire while I was sitting on the beach in Hawaii. And I was like,
I'll take 2 Mai Tais. Thank you.
I'll take 2. It's funny. I didn't take a Mai Tai, but I went and bought a nice pair of sunglasses. I was like, son of a bitch. And
those Mai Tais are like $18 each.
Dude, I'm telling you, in Maui, it's the lava flows, right? That's a spiritual experience, though. But I just remembered it is at the time it is when you're building a kind of a high level advisory and consulting business, is that where you work and where you live don't have to be the same thing. And although I was living in Hawaii for a month or whatever it was at the time, it is, we were still working and putting deals together, it is. And while I was experiencing things and getting paid with my family, and I was like, there's something to this. And so we tried to replicate that and get smarter over time. But there's something to kind of charting your own course and being your own person. And I think it is that we are seeing that more and more now with this kind of return across the country it is to small business. Like, we're seeing the Cody Sanchez's of the world and Pace Morby's of the world, and these people it is that are going out saying it is, you need to do your own shingle. You need to start Jeremy Inc. or you Inc. or me Inc. or Mike Inc. or whatever it is, right? And whether that's real estate or small business or owning a laundromat or fixing houses or starting a podcast or having an online business of one kind or another, the world is moving towards that. And that was an example of that for me 20 whatever years ago, that I was like, I could never work for anybody else.
I kind of feel that way myself. Like my background is in sales, and I was working for some great Fortune 500 and 100 companies, everything from selling Sleep Number mattresses to Liberty Mutual Insurance, door-to-door, auto, home, life insurance, but office as well. And so I learned the art of sales and networking and joined BNI groups and the local chamber of commerce and meeting people and sitting kitchen table to kitchen table. And I really enjoyed it. But I didn't, at the end of the day, align with some of the values of the company or the way they did business. Or when I found out 45,000 people just got let go on a Tuesday because we didn't even know about it until we sat down in a meeting. You don't feel good about that stuff. So it's like, I feel like I can sell this product pretty well and that product pretty well. What about my own product? What do I have to offer the world? And that's why I started Social Community. And it was really a tough thing in the first couple of years of, I didn't go to school for business. I had no business acumen. I just had sales acumen of, follow up or nurture your leads and just be a great person and really talk to everyone like they're your mom or dad. Like I just had the old school sales mentality. Right. And, what I guess I'm trying to get at here is there was a moment in time, and I was actually going through a divorce, where I had this really early 31-year-old midlife crisis of, why am I doing all this? And I was doing everything for my family, whatever. I would do anything to put food on the table as long as it was morally and ethically good. And so I did that, but then I realized I wasn't fulfilled, man. So a lot of like you're saying, you got to bet on yourself because there's something that God put you on this planet to do. Figure it out and go run with it. Yeah. Now you get into real estate as well. Is that correct?
We did. So when JB Capital started, we were 100% real estate. So probably the first 450 or maybe $500 million of deals we did was exclusively real estate. So it was,
what sector of real estate? Was it like flipping, personal homes, or was it like businesses and
no, this was primarily investors, developers, and builders of residential, whether it was single family residential or multifamily residential. So it was guys that were building typically, 50 to 500 units a year that needed something different than what, the rich guys at the golf club and the local bank could do. And so, early 2000s, this is when the RIAs and wealth managers and family offices were really starting to look at alternative capital markets. Like now that is where predominance of focus is for a lot of these guys, is really increasing dramatically their access to private markets. Back then it was just starting. And so we got really good at developing those relationships with them and giving them access to something that was, outside of traditional, stock and bond portfolios. Got really good at that. And so we did, again, I don't know, somewhere between 400 and 500 million between 2002 and 2008, exclusively in real estate. And then GFC hit in 2008, and it's like our client roster changed. Now, instead of serving Bob the builder, I'm serving Bob the banker, right? Like the guys that we were trying to get money from are now the clients because they have 20 Bob the builders, right? And they've got, $100 million, $200 million or more of assets that are now non-performing. They didn't know where half of it was, didn't know what any of it was worth, but they knew that they needed money because, the government's up their ass it is to reshore their balance sheet. And so that became a different time. And so during that time is when I just met a different level of people, not a better level, just a different level. But this was, Jake Jacobson at Aria and Joshua Harris and Mark Rowan at Apollo and Tom Barrick at Colony. And these guys it is that at the time were the titans of the industry. Several of them still are. And because I was in the room with them, Mike assumes it is that I'm just as smart as this guy. And I didn't want to open my mouth and show how stupid I was, right? So I just sat and listened and took notes. But what it did is it gave me visibility into how the other side of the balance sheet thinks. And so at that period of time, they said that Tom was crazy, Tom Barrick at Colony, because he was buying 25,000 single family homes in Southern California, Arizona, and Texas, and turned them all into rentals. And they're like, what the hell? What? 5 years later, when the market stabilized, he's brilliant. He made a fortune, right? Yeah. And so that came out that way. As that market kind of stabilized, we started adding and doing more corporate credit. And then ultimately, about 70% of our business became corporate credit. About 30% of it was real estate. And then at the end of 19, first of 20, we started our first fund, which was a lower middle market corporate credit fund, to where now we're doing off of my balance sheet and the fund's balance sheet that we raised, what we have been doing off of other people's balance sheets for the previous 20 years. And so we had have three funds now in the market. Two of them are in corporate credit and one of them's in real estate credit. So I love kind of turning the dials of the Rubik's Cube and putting this stuff together. Is just, it never gets old.
But you picked, one thing that we talk about a lot on the show is like really finding your lane. Now you can have a couple different lanes, but you don't want to have 27 different things you're trying to do, because you're not going to be able to do any of those very well. So your two lanes are corporate and real estate. Now, do you have something that you feel like in your gut is kind of your favorite thing that you get involved with?
Really for us, ultimately, and as a lot of the stuff it is that we're doing now, I've kind of become introspective with. Fundamentally, the thing it is that I like, that everything kind of boils down to for me, is I feel like it is that I want to help and give voice and attention to those people it is that are either abandoned or not getting the attention that they deserve. And how that came to be in private capital was there were these companies it is that were, again, you've heard me say, past the friends and family, mom and dad, rich uncle round of raising capital. But the challenge was that they didn't need, old rich guy, rich uncle, golf club type money. But they weren't to a point to where anybody with any real dough actually gave a shit. Because if Mike and Jeremy have a little 5, 8, 10, $15 million business, that's a great business. That's a great business. But I'm kind of past the golf club rich uncle guys that, want to put in 25, 50 grand, 100 grand. The guys in New York or Chicago or London or Shanghai who have real money, like they'll spend $10 million on a Christmas party. They don't give a shit about my 10 minutes, right? Like, so who's helping that guy?
Hard to fathom, right?
Yeah, like, so who's helping that guy? Who's coaching that guy? when you have 100 or 200, $300 million business, $500 million business or more, you have access to a different set of advisors. You have access to different information. It is to help you make decisions that when you're at 10 million bucks, you're not invited to the party, bro. Mm-hmm. And so who's coaching that guy to make sure it is that he's not getting screwed, to make sure he has access to capital, to make sure he says, hey, dude, you might want to be thoughtful if you're going to go this route. Here's why. Here's what we're doing. Let me walk gingerly with you to kind of help you through that. Fundamentally, that is what I became more impassioned about. And that started with helping these real estate developers. And it evolved into helping real estate developers and investors and entrepreneurs and builders. There it is, that were doing real estate. And then small little, because I came out of Seattle, technology and software and healthcare and health tech type businesses.
Cool.
But fundamentally, it was the same. It's how do we walk through the private capital markets and solve your problem, and let me kind of, act as a Sherpa or a guide. It is to help you avoid some things along the process, right? Let me just be your friend and guide you through that. And that, I think, really, if I look back over the last 24, 25 years, is what has never made this business boring. I don't know. Mm-hmm. That part has been great.
Yeah, there's a lot of variety of different projects you're working on, people you're working on, businesses, like you said, the tech side of things. I mean, yeah, that can always keep it spiced up for you. I just want to say, talking with you, I feel we just met today for the first time. In the first 5 seconds, I felt comfortable, like we're having a cup of coffee, hanging out, just getting to know you. And you could be doing a million different things today. And I just appreciate you spending an hour with me, really to help our audience out. I'm your first audience member. And you're just a great person to talk to. I really feel comfortable around you. I can see why you're good at making deals, because you're comfortable, you're confident, you're a great listener. And then you deliver concisely what I asked. Sometimes you ask someone a question, you get a 25-minute story about
right.
their college buddies and stuff. And you're like, how do we end up here? So you're a great communicator.
Thank you. Man.
What I want to do.
Thing.
Yeah, you're welcome, man. You definitely earned it and deserve it. And I love seeing people highly successful, and it's like, they didn't get there by accident. This guy works his tail off, and he's a great person. He's got a beautiful family. I want to give our sponsors a little bit of love real quick. Social Chameleon, that's my company. We produce podcasts, as everybody who tunes into the show knows that by now. But if you want to transform your podcast so it looks great, sounds great, get those social media clips so people can actually click through and find your show. Get to your YouTube channel, Apple, Spotify, wherever podcasts, where people like to tune in. We create that for you. We launch shows. We take it from where you're at. And we also help you get to the level you're looking for. So go to socialchameleon.us and you can check us out there to transform your podcast. Also, we're recording this on riverside.fm. So I have a lot of love for Riverside. They produce they provide great quality content that we get to produce. Then also Libsyn.com, Libsyn.com is how we do all of our audio distribution. They've been around for about 20 years or so. So I feel very confident they're going to be there if you need anything. Their support team is always top, world class. So that's shout out to our sponsors. Now I got you for a couple more minutes captive here before you get on to your next appointment. I got to ask you, how do you envision that private credit? We talked about how it's evolving the market. Where do you see it going in maybe the next decade? Is it going to continue to evolve and grow? I mean,
yeah, I think it's going to pick up steam. And so I think the future of private credit is probably going to be very similar to what it is that we've seen in private equity in the last 25 or 30 years. Private equity has kind of gotten to the point to where it's almost dragging private credit into its success. So private equity is always trying to figure out a way to make a $5 bill look like a $20 bill, right? Through creative finance or leverage or otherwise. And so as private credit continues to grow, or as private equity continues to grow, it's kind of pulling private credit with it to allow it to be able to do more with less, right? They can lever bigger deals by utilization of private credit. I think that's one thing that's going to go. The second thing is I've got a bunch of banker friends, and God bless them, but just most bankers are just not that smart, dude. They're just, right?
Is it to the point where the technology is there where someone can literally get something done just through a form on a website compared to going in and sitting with someone for an hour and going through?
Yeah, it's just, it's different now. And so I think the combination of
and by the way, I'm pro go in and talk to someone and have a human behind it, because the human element is super important. But I also know that it's 2025 and my generation and younger, they don't really want that. They just want to click and get some money.
Yeah. So private equity continuing to grow is going to pull private credit with it. The combination of kind of banks, not getting out of their own way, and this like major demand for small businesses continuing to grow across the country, I think is going to continue to move private credit into the forefront. I don't know if private credit will usurp and become as large as private equity, but it's now, I think, the third or so, fourth largest alternative asset class in the world. And so when we look at it, private credit was 1.7 trillion in AUM about 18 months ago, 2 years ago. It was set to be 2.7 trillion next year. They think it will be 10 trillion as an asset class before 2030 in the next 5 years. That's a major, major growth. So all that means is that for all of your entrepreneurs, small businesses, and otherwise, is that you really need to understand how alternative capital, which just means non-bank money, you really need to understand how alternative capital can be utilized to help you get to your point B, whatever that is, whether it's buying your competitor, opening your next office, paying off your wife, your ex-wife, your dog, whatever it happens to be, getting your next product out, launching something else. Like learning how to do that and accessing all this stuff that's non-bank financing. If you can find 2 or 3 niches there, it can really allow you to kind of accelerate and grow beyond those people it is that are still trying to figure that stuff out.
Yeah, that's some really great clarity on that. I got to ask, this is a little bit of an ignorant question, kind of like when you were asking the guy, so where does that money come from? So, for the early stage entrepreneurs that they have that hope, they're fighting, they're doing the 24 hours, they built a business, they're getting some profit, they're above water, they're going to that next level. What, so JB Capital, we could talk about you directly. Like, what is it about a business that's sexy that you're like, whether it's small, medium, big, huge conglomerate size, like, what's the first thing you see that's attractive about a business? Is it just profit, bare bones, or like, is there more to it?
Yeah. I mean, so for us, you remember when we were talking early in the conversation, is ultimately your investor has a thesis, right? And so as those companies are growing, they want to make sure it is that they are talking to an audience that thinks similarly about investing in companies to where it is that business stage is. So for us, when we're loaning money or putting deals together, it is to invest in companies. Like we don't do startups. Like I don't do a good idea on cocktail napkin or companies it is that are pre-revenue. There are plenty of companies it is that do that. I'm just not that smart, right? Like, so when
I honestly don't really understand that, like, especially, what's the show? Shark Tank, where someone just like, we got this idea and they got a t-shirt, but they don't have any products yet.
Right.
And they're out there and they're really well spoken and they're smart and they've probably watched 1 million episodes of the show. So they know what they're doing. And they can get, it's not just Shark Tank, but in the real world, like not with all the cameras shining, they'll get 100,000, 300,000, 1 million, 2 million. I think it's crazy that business doesn't even exist yet. So like, maybe I'm just crazy, but I don't really understand. Yeah.
But again, that goes back to the investors it is that do that, right? Like there's early stage investors that can help companies it is that are either at startup concept, just barely getting started, just early on in the first year or two of the business it is. There's investors it is that have capital to deploy in that have that degree of risk tolerance to go in on something that could either explode or fail or do whatever.
It's a gamble. They're playing blackjack, basically.
Yeah, exactly. There's guys that do that are really good at it. I'm not one of those guys, but I know people that have made a gobsmack of money doing that. My brain just doesn't work that way, right?
You like to see something, okay, here's where you're at, couple years of understanding it, seeing where there's growth problems or success stories. Okay, so you're evaluating something that exists and feeling that out. And then what is it about that company that you're like, I think this is someone we really want to go in and work with?
Number one, it's got to be, does this company kind of fit the thesis of what it is that we're looking for? Does it exist? If I'm investing in software companies in healthcare and health tech and technology enabled services and the upper end of profession services, law firms, CPA firms, etc. If I'm investing there and Mike comes to me and he's got a great company, but it's a construction company, I'd be like, dude, love your business. I don't know shit about construction companies. Like,
yeah.
So does it kind of fit in the thesis of where it is that we're investing and where it is that we've told our investors that we're investing? So that would be number one. Number two is, where is the business at its stage, right? Like, we typically like to invest in companies that are between, kind of $10 million in revenue up to 100. If this guy's at, $2 million in revenue and he wants to borrow $2 million from me, that seems like that's maybe a disproportional risk to return from where his business is at. Like, he may be too early for me to invest. So what's the industry? I guess first, does that match up to where it is that we want to put dollars to work? Number two, what's the stage of the business? Is he kind of fit there or close to? Then number three is like, well, what's the capital for? Right? Like, what do you want money for? Are you trying to get a new product out by the guy across the street, pay off a former investor? Or are you, what are you trying to do? We like our capital to be catalytic to the growth of the business. Like, I don't want my money coming in to solve old problems. Like, I don't want to pay off my Visa with my MasterCard, right? Like, I want my money coming in. It is to provide for, we're launching this new product, hiring 5 new people and opening an office in Dallas. Cool.
You don't want to be, doing construction work on potholes. You want to be building something new.
Totally.
Yeah.
You want it to be for kind of growth and trajectory and that kind of thing of the business. Yeah. That's ideally what we want to do. Then beyond that, we look at, okay, well, what's the expectation and the understanding of capital, right? Like, so if somebody says, great, here's where it is that we're at, here's where it is that our profitability is at, and we want to borrow, $5 million as a $5 million company. We don't want to give up any equity and we want to pay 7%. Like, dude, buy a scratcher. Like, I don't know where you're going to get, right? Like, I don't know where you're going to get that, right? Like, so do they have a fundamentally clear understanding of actually what private capital costs and how it works? And so if we get through all of those kinds of things, then the next thing is, do I like the founder? Am I going to work with this guy for the next 2 or 3 or 4 years? It is, do I like him? Does he accept counsel? Is this going to be somebody that we can have a relationship with, work with, grow with, struggle with, and all these kinds of things over the next 2 or 3 or 4 years? And will they accept counsel from us? The last thing is, right, beyond all of those things, once it is that we get through all that kind of thing, the last thing is do I think we can actually help? Yeah. Right? Like, if you're in the industry, we like, we're in the revenue period, is it like you got a good expectations of capital? I really like Mike, all of these kinds of things. Then it's ultimately, do I think that I can actually help the guy? Because if the only thing that I bring to the table is money, then I shouldn't give it and you shouldn't take it. Like, there needs to be something different about my involvement of your business. Because if it's just money, somebody always has more money. Somebody's always taller, richer, better looking. They're always cheaper. It doesn't matter. So there has to be.
It's envisioning the better version of this company.
Yes, totally.
With that money. If you see 6 months from now, person's going to feel the same. The company's going to look the same, but now they just blew through your 50 grand or 100 grand or more. Yeah. Like, you have a good gut feeling for that. And doing that for over 20 years, I'm sure you can sniff that out in a hot second. And you just know, this is a good feel. This is the right person. And I'm sure there's times when you really love the person. It's a great relationship type situation. You feel it and it doesn't always work out. I mean, that's part of the business. And there's probably sometimes you're like, I don't even know, we're going to do this, but I don't know, something doesn't feel right. And then they surprise you and it becomes a great success story. So
we've experienced both. It's, unfortunately, I think it is that we've been surprised more by people. It is that we bet on. It is that either turned out to be all hat and no cattle. Yeah. Or people it is that, made some poor decisions. I mean, the thing it is that he found is that money makes people do weird shit. And when money gets tight or something else, it's surprising the decisions that people make. And people can lose their character really quicker than I thought would ever happen. And so we've been surprised more that way than I've been surprised of, hey, I think this guy's going to do well, and he knocks the cover off the ball. Those guys, I was like, well, of course you did. I mean, look at him. Look at what he's done beforehand. Look at
you hate to see how when someone's in their darkest hour, all of a sudden they're a whole different person when you met them on day one.
Yeah, totally.
Man, you gave us so much to think about today. I could talk to you all day long and just really enjoy your presence and being with you. Unfortunately, I got to land the plane here. Jeremy Hill, you are the real deal. Just an awesome person.
Thank you, Bill.
And I'm just really happy to hear that you built it. But what I love about your story is, and you made sure in your bio that you sent me, you're proud of being a great husband, great father. You got a beautiful wife and kids. And was like as important to you, or the most important thing. All this other stuff is like, cool. You're glad it worked out. But that was always, you had it at the right spot on the level of importance. Family first, and I really appreciate that.
It is, man, because the likelihood of all of us having a different job, a different profession, a different whatever it is pretty likely that what you did 10 years ago may not be what you're doing 10 years from now. But my wife is always going to be my wife, and my children will always be my children. And so making sure it is that I'm not out of alignment that way, and knowing what it is that you're doing for, it's a lot of people give it lip service, but you don't actually see it recognized in their life. And I think that,
I got a pretty good sniff test on that, and I don't feel that for you. It's not lip service.
Thank you,
it's a real deal, man. And so enjoy your time out in the Scottsdale. Where'd you say? Paradise Valley?
Paradise Valley. Paradise Valley.
Paradise Valley. Yeah. What a beautiful place to be. So enjoy that. Jeremy, thank you so much. I always end every episode with this. Be great and be grateful. And I'm grateful for your time on the show today.
Enjoyed it. Thanks, brother.